Okay, how about now? I got everything wired up. I had to restart part 3. Everything good? Hopefully the audio is fixed. I checked. It was on my end. So I keep a recording onto my hard drive and the recording had messed up audio. So I guess it was me. I'll have to track down what that was. Maybe something to do with 2 videos in a day. The computer was like, "Whoa. Slow down." And I was like, "No." Okay. So this morning we had a bullish presence in the market. The narrative was bullish. We had a lot of interesting things going on with, oh, good. Okay, so Matt's saying I got better audio. Good. You remember right as we opened, we had bears come in and they failed. We had the bulls show up, trap them in. That was successful. We had then let me actually draw this out so you guys can get a good view here where this come from. So if you go right here, this is sometimes you just got to reach back, and you could use either one. It ends up with the same, this move here tested those. We'll just grab the higher one just because. You see that? So that's the wide test, and this was the short test. So you see that? So it was a wide and then a short amount of time right after, and this is really common. Okay, and it's important that you interpret this correctly because it changes everything if you read it this way. So you see we have our wide, the short. So this is the one that I pay attention to. And just above that, you have the stops. So the thing with the decay retest is that it exposes your stop loss. And you could see the market swept up. Look at that. It swept right through. And what I'm seeing there is that we had a wide short show up, the stops got hit, and right here hitting those stops was open interest theft. This is a big deal because open interest theft is a form of liquidity. It's typically more complicated and difficult to read, but what it is that these guys here created the open interest, and then the open interest was taken from them. It got real close to that area where I thought stops would be sitting for liquidation. So that's what I was watching for. And then seeing this pop up and provide bearish liquidity gives you pause. So we have 2 positions here for the bears. Well, there was 3, but this right here had no expectation of showing up because they had just got trapped in here. So no expectation here, seeing a decay retest, which failed and fell apart and then created liquidity. And then you look over here and you can see right through this zone, they were doing what they could, and then it just took off as it moved down. So what we're seeing here is the bears trying, and they're doing what they can to try and ride this down to 0. But there's a big problem right now. This was absolutely unapproved. The bulls didn't step aside. I don't see bulls picking up liquidity and failing. What I see, this is what I think is going on here, is that you see how far away decay is from 0? Look at this distance. That distance is pretty big. And look, the shove down didn't even get close. And then you look here, there's no chance of sampling the bulls. So what I think happened was there was some liquidity to be gotten, and the distance down to a lean down was high enough, and the bears came in and they hit. And this is tough. So when we're moving down, you have to say, well, what are they trying to accomplish? And this is a big deal. Remember, we're looking at the lean up, and we were getting pretty close. And then this happens. And then the lean gets put on hold, and then it turns into a lean down. See, so they get that complicated liquidity. It pushes it down, and then right here we cross. There's the trapped orders. There it is. This is bullish liquidity. And the expectation is absolutely the bulls are going to pick that up. So the condition is changing right now, and this is important. So we're getting here, the bulls, it pushes up, bears are here, bulls are here, bears, and then we get this, you see that right there? So I'm going to use a crosshair so we can get an exact, so you can see where it happened. Cross, there we go. So you see right there, we'll say just after 1430, so 1430. right here. So look at that. It hits 0, and look at this. It's having a hard time. It's okay. So this is that enthusiasm again, right here. There's no trapped orders when this hits that. It got pushed down from eager bears. And this is the same, I think, the same type of people that went in here is eagerness, that eagerness to come in and act before it's quite ready. And this was eager. They came in and acted before there were trapped orders. The trapped orders finally show up here, and then the market continues down. And now you can see that that push down, this is really interesting. You're getting the sample here. You see the trap there. And while it's pushing down to find those orders, it crosses over and gets bullish liquidity. This is a big fat shove by the bears. They are pushing with all their might to get this to work. And interestingly, right here, it is. Finally, at this point, the bulls, they move. The bulls move out of the way right there because you see the bullish liquidity showing up right here, the trapped orders, and it doesn't really pop, moves down, no impact. This one here, they picked it up, popped it up, tension curled, they were hitting. This one here, they picked it up, popped it up, tension curled, they were hitting. So finally, the bulls are moving out of the way. This is when the bears can start looking at elasticity. This is where that we're starting to get this mentality. So what does that mean to look at elasticity? It means the bulls just said, okay, well, this is interesting to me because this is where it starts to get interesting. So I'm seeing a lot of drama going on here. This is dramatic. Okay, so if you wanted to eat a whole bowl of ice cream, and you don't want to share that ice cream with maybe a sibling or something, and so you're like, I really want that ice cream. I really want it. And the parent in the situation is like, oh, hold on. And the sibling gets to sit and eat the ice cream. And then finally, at the very last drop, the parent says, okay, no, you can have it. You're like, it's all gone. You waited till it was. That's what just happened. Look at tension. Elasticity would have been great here to write it. Now the scope is literally just a 10% move. 10% to get to 0. Less than that. 7. We're at 7%. So we're right here. It is. So the bulls are letting the bears in here at the end of the move. This is tough. This is really tough trading if you're trying to track the narrative, because we had to wait until here to see the nod come in, and now we're getting that nod. So what we need now is to look at bearish liquidity. And this is tough because we have bearish liquidity here, and you can see their impact came in. We have bearish liquidity here, and you can see that they impacted here. So we have active bears in the market, but we have already had active bulls in the market. These guys are face to face, and the bulls just said, okay, the bears can have it, but you can only have this much. So if you guys shove from here on down, you're going to run into a brick wall pretty quickly. You can see how this is dramatic, because why did they wait till the very last moment to say, all right, you guys can have it? And why are the bears pushing so strongly prematurely? And those are the kind of questions you got to ask about this, and try and figure out in your head, well, what do you think's really going on here? Why would this happen? Previously, in the last couple days, we were tracking cheating, and cheating is an instance where you have an entry, you hop in, and there is no reason for that to work. And then after a good amount of time, it does, and it does well. And basically you say that this amount of time, when that's a lot, when it equals high, it's a high amount of time, they knew something long. It was insider trading. And that's kind of the way you track cheating. Another way to track it is when one side takes on way too much risk. Like, whoa, why did you guys do that? And we've seen these kind of things going on. So today, let's look to see if there's any cheating. We don't see any. I see that the bears tried to get in here. It turned them right over. They finally got the liquidity, and they pushed with all their might. So they're trying really hard. They got in here and pushed with all their might, and I think that's what's happening here. Are the bears preceding some news and it's completely unjustified? No, I don't see that. We have, this was a legitimate place to hop in where that you're getting this open interest theft. Okay, fine. And they're pushing it down. Okay, we know you want elasticity. It's a little premature, but okay. The bulls, they come in and buy. So this is a big fight. We're not seeing cheating. The bears were not carrying an unreasonable amount of risk. They got blown out. And then that unwinding turned into liquidity for maybe themselves or somebody new. I don't know. And then they came in and they tried to support that position. And it was support from a winning position. So this second one right here, I'm going to call this one 1 and this one 2, was adding to a winner. And so I don't see cheating here by the bears. What I see is a lot of effort. And the bulls, well, they're continuing to maintain their control over the market. That's it. They have kept everything positive. So we have two really different opinions. Bulls think, oh yeah, let's go ahead and do this. We'll buy into the liquidity. We'll continue to do that. The bears are just trying. I see a lot of effort. I don't see cheating. That's important because they're early. This is a problem. When you come in and push really hard and you get early, and then finally at the very end, the controlling party's like, sure, you can have it. You have to step back and go, is this a trap for sellers? Boy, it smells like one. You wait until the very last moment to finally give the approval, and then those sellers go, cool, and they push. And then where do they go? Where are they going to go? Where are the bears going to go? They're going to push tension down. Okay, well, they might be able to liquidate this position. And you might even argue that they did, because look at tension curled right down, and that's the impact of pushing out a position. We have these guys, and these guys. Though I would argue that just one little move down like that is not going to liquidate 3 positions. It would look a little bit more, that one position could do this. So I think liquidating this position could totally work. The next thing to worry about is this one here, which is the root position from yesterday. It's the one I'm the most concerned about. So I'm going to mark these on this ES chart right here so we can get a look at them. First, we have our bullish, bearish positions from the open. I still have it on. Then we have our bearish position off the high. And this one was just straight bearish. So I'm going to mark it out a little red so we can see that. We have the bullish position into this low here. And the reason I'm leaving that first one gray is because there was both positions in both directions there. And now we can mark out where the bears are right here as well. And you can see that for the most part, that order sort of fit into this little area, but we'll mark them all out anyway. Then we can mark out where the liquidations will be. And let's see right here. So I think that, down past the lows here is probably where, if I was an institution I was buying, I'd say, well, we're going to see trouble if we can get down through there. So widest possible spot, that's going to be it, but you're going to need to watch tension. And you can see tension's curled down pretty aggressively, and I think that has to do with this position right here. I think they got hit pretty hard, but I don't think that's all 3 positions. If the bears intend to liquidate these bulls, we're going to have to push down through 92. We're going to have to get down to this position from yesterday. In fact, I'm going to mark that one as well. And this will be the one from yesterday. I think this one's important. I think right about here is about where it's at. Okay, there we go. So we've got our positions. You can see how that they're lining up here. We have some bulls, we have some bears. The bears are currently in the position where they feel like they have just been told it's okay to drive this down. The problem that you're going to run into logically, and this is why I think that now things are very difficult trading wise, is because we get this situation where it's like, well, how could you have known that these were going to work and that these guys were going to give a nod? And you couldn't. I don't think there's any way for you to, well, unless you have a system that can make that declaration. This system says Those bears are doing well. They were impacting tension. They added to their position. And I think the bulls said, oh, okay. You guys are legitimately interested. Remember, yesterday into the close, we need bears legitimately interested if the market has any intention of continuing. So when the bears show interest and the bulls step aside, that's what's happening. I think the bulls are saying they need a legitimate chance to take control of the market so that they can participate. Otherwise, there's no way we're going to be able to get this to push new highs or a second leg without a legitimate. This is part of stress testing. This was very hard. These two positions and this one. Because as soon as you get the nod, you say to yourself, now the bears need to get in. And the answer is, well, they're already in. And that's what makes this difficult. And I think it's built that way. There's just no way to really get ahead of that if you want to strictly follow logic. You could have had a hunch. You could have seen things developing. You could have potentially done that. I don't think it's a really great trade in terms of this structure because it's like impulsive to me. So that's where we're at. Why would the bulls let this happen? And if you remember, well, we needed that. Okay, so again, back to this problem though. Why wait until the very end? Well, I'm not entirely certain that the bulls want the bears this enthusiastic with this much room to run. Look at how much impact they had with just this. So it seems if they had that, we could have had a really beefy move. So I think the bulls waited until it was pretty limited. Coming up next, the thing that the bears want is to get this to zero. Remember, this is their whole goal. We get that to zero, we stress test, meaning are the bulls going to defend tension? And the question you have to ask yourself is, well, have they? Do you think that makes sense? And I think, yeah, I do. Sure, they just missed this bit, but we've seen them show up here for days. They've done a great job over this whole thing. They finally let the bears have a push, and I'm not sure that I would say that the bears are just toppling the bulls. I think the bulls said, oh, you guys really want to push? That was our whole goal, was to get you enthusiastic. And this looks enthusiastic. So could you predicted this move down? Maybe. But you would have been trading on a hunch and your risk would have been higher. I think more likely the best trade here today was this one and then this one. And that this was the number one trade. It was lined up pretty well this morning, and this would be the number two trade. There was no bullish failures, no reason to think that they wouldn't show up. The problem you to run with number two is if your expectation was to try and liquidate this position here and you ran into this, this is how long you had to reevaluate and say, well, I'm not sure this is working, which was a very tough thing to do. Tough. This was hard. So moving from here forward, the bears are looking at this. How are they going to get this down to zero? The easiest way for them to do that is continue to push and liquidate these positions. And I think that, so yeah, so you can see we're getting down, trying to push through that low from earlier. You can see that was the overnight low. And I think that the best way for them to do that is to try and really hammer that liquidity. If they can do that, there's a potential. If we hammer this down through here, just destruction, that the market can get tension down at least really near zero. Why is that important? Why would I want that? I would love to see that happen, because if the bulls are going to hit this back up, one of the best and most difficult things to do is to have a zero test of tension into the close. It's hard because the market closes right after. And so I think it creates a lot of volatility in the market, a lot of activity, things that people do stuff. It is a difficult thing to do, but in this spot where I'm seeing them shooting for this liquidity, getting this tension moving quickly twice now, potentially we could get there. We could get tension down to zero, get a zero test, and then we can look at the bulls. And the bulls, I think, should defend 30-minute tension. If they don't, If they don't, buckle up, because this has a ways to go, and the bears are, in my opinion, more than ready to jump on board. So that's what I think's coming up. If you're bullish, you're sitting here saying, okay, it's coming back. This is our stress test day. We saw the bears and all that's okay. We're at where we're at. We need to defend that 30-minute tension. Why do I think that the bears would have a long way to go? Well, the last couple days through all this market, the things that we've been watching through here is that the bears have just been slaughtered. And it typically is that we can mark out where those things happen. And I think there's some good justification to move down into these, not that one, this range here, way down, and there's a lot of room to run here, and bears just love to run. So if 30-minute tension doesn't get defended, the bears are thinking, let's start hitting some major positions. That's what they're gonna be thinking. And I think that running to those major positions will bring the daily tension back down to zero. So the bulls have a lot of precedent here. They both for the fact that they need to defend or they're going to run into trouble, and because they have been doing so well. They have done such a stellar job wiping out the bears that there's a big precedent. There's a whole lot of weight on this saying you guys really got to do this. So the next event that I'm going to be paying attention to and considering being active around will be a zero test. Is it possible that we never get it? Absolutely. Yeah, that is possible. I think best case scenario, though, we get this down. I would love to see it right near or at zero into the close. I think that would be the best, because nobody can hold on to that. It's going to wipe out all the bulls who, wherever you were, you're probably going to get wiped out. The buyer can come in then and take consideration during the overnight session, and the market has the potential to gap up and then get pumped again tomorrow. And I think that would be the best for the bulls. For the bears, they just, what I think the bears need is to get through these liquidity positions, get this down, not too close to zero, but, to it, or potentially through it. I mean, but that would be a really, 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 really aggressive move to cause that. It would be way down. So both players are looking at the same side, in my opinion, right now. They want the market to move down, and they almost want the same things. Basically, I think the bulls are saying, okay, you guys got this. You got it. And they're looking to catch at the next event. And the bears are saying, all right, we got this. Let's go as far as we can to make sure we get our foot in the door as much as possible, so that tomorrow we can look at getting daily tension down. This is starting to get hot in terms of like narrative and conflict. So that's where we're at. I'm not going to be doing much here. I think that today's best trades were buys from this narrative. I think they look pretty good from the long side. Into the afternoon, it got complicated and difficult and reversed, and that's tough. And that moving into the future, the next big event's going to be, are the bulls going to hold on to that tension? And if they're not, there's some people who have some money and they want to pump the market down to try and get that daily tension or zero. And it could be a good push. So I don't think at this moment that the bulls I don't think that they're not going to do anything. I think they will defend 30-minute tension. And it could very well be that we get this to move down, and it does move. It could even be tomorrow. It could move down through, and something that's totally fine. What's important is that they defend it and they do things that allow tension to curl back up. And we've seen this before. It's not like it's just difficult. We've seen this kind of thing before, and you see leading right into it can be pretty aggressive. Once the bears realize what they can do, they push. And here again, we saw that leading right into it, move down, and then we got our test here. So this is where we're at. We see this story a lot. So if the bulls defend it, most likely we see prices come up. We see tension start to curl. We say, okay, the bulls are here. They were just looking for that. Then tomorrow, when that happens, you're going to be looking to liquidate the bears. And the goal will be to get basically most, if not, or all of the way or more back up, liquidating as many people along the way as you can. So this is that event, the one that we were talking about yesterday. Can you convince the bears to come in? But at the same time, remember that if you don't hand the gun to your enemy and let him put it to your head, there was no real risk. They have to be able to genuinely defeat you and fail. Then you have a successful stress test. If that is not true, you didn't bring in real risk. And that's the danger that we're looking at here. And it has to happen. So keep that in mind. The 30-minute tests look good to me based on the fact that I think bulls have been doing a great job. And so I don't think that they're going to let it go that easily. And I'm just going to step aside and be like, never mind. If the bears do win, I think the first real stopping point will be the bluff day. It was the day that Trump came out and said, I'm going to spank China. And I believe the bluff day was this day here. I think this right through here is the first place. That was the first time that I thought that I picked up on what the bulls were doing. I think the shenanigans were going on there. That would be the first place to go. If the bears win possibility space, that's stop one. The second place to go is from way back when, right here. When the bears cheated, brought it down, and the bulls beat them. This is the next stop. Those are the two places that I think would be next. It's that the bluff day that we had a couple days ago, and then after that, it was when we let the bears just hang themselves, and that bottomed out the market. Those are the 2 days when I think the most conflict was happening. That was the most interesting. That's going to be the heaviest spots to get to if the bears win this. And that's a ways to go. So that's just, I want you to take that tentatively. I'm just saying that just so you can get an idea of the scope. I think if the bears take this out, there is reason for them to try. I also think there's reasons for the bulls to try. They're getting the stress test they wanted, and the upside will just have to do with liquidations. I don't have a particular hard target, but in terms of narrative, this interests me. Why did the bulls wait so long to let the bears have it? Usually on a really good elastic market, you do it here. So I'm highly suspicious that this is a big fat trap for the bears. I'm very suspicious that we get tension down to 0 and the bulls pick it up and we shoot back up through the high as we liquidate all the bears who got pulled in and tried to help this stress test along the way. I'm very suspicious of that. This is interesting behavior to me. This is narrative in play that I think is important to put yourself in their shoes and say, why did you wait so long? It's not like they were losing. I mean, the bulls had a position here. It worked fine. They had one here. It worked fine. It wasn't like they just stepped aside and had failure. It's just like, why now? And I think the answer to that question has everything to do with the proposition we made into the close of yesterday. How can we get bears motivated to genuinely come into the market so we can fold them over and push another leg? How? And I think if you consider what happened here with the complicated theft of open interest for liquidity, and then another push, and looking at how hard they pushed. Remember, this push was not approved. The bulls did not say, yes, you can do that. This was just sheer grit by the bears. I think the bulls said, this is what we wanted. Actually, maybe we should just allow it to happen. I think that's what happened. And I think into the close here, it's pushed down and they're getting what they wanted. And the bulls are going to come in and defend. And the bears, again, are going to be on the backside and it's going to hurt. That's what I think's going on. I don't think this is bears winning. So that's what I think. So going into the close, I think the things to pay attention to here are if we can get some sampling going on. And the reason I think that's important because we just got the nod right here. So it's like, where are the bears? Now that you've been approved, where are you? But then you consider the narrative that I just laid out, which is, I think you guys are screwed. I think you guys are just running into trouble. So then you say to yourself, so if this retests, would you want to sell in a situation where that you think the bears are getting led into a trap? I wouldn't. I won't. I'd be more likely to try and fade this low than I would be to sell a bearish sample, because I think it's everything the bulls were wanting. I know it looks like you're like, oh my gosh, but it's down and it was so fast. And I'm like, oh, who cares? It's achieving things that we wanted. It's getting things done. And I care about the work, not the other stuff. I don't care if you, this would be like if I yelled at my kids, go clean your room. You do it in 5 minutes. Still, 5 minutes or an hour. Both have the same effect. You got the work done. Cool. I don't care how fast you did it. Sure, they're getting things done quickly. In my opinion, how fast things can move through a narrative and change the events and make new stuff happen has a lot to do with just activity. I think if all the institutions and all the traders were all active right now, we would be seeing samples and blowouts and liquidity and pumping, and we could see all these events just play out really quickly. But there's a speed limit in the market. Did you know that there's a speed limit? You can only develop a market as quickly. You ready? You can only develop a market as quickly as human emotions can mature. The market can't flashbang you from fear to hope to apathy to fear to hope to apathy. The speed limit here is you, not the algorithms. Because the algorithms, I mean, think about this. If you have algorithm A, let's do algorithm 1. So push the wrong button, algorithm 1 and algorithm 2. What these two do is they look at each other and then they optimize. So they increase optimization to deal with algorithm A. Okay, increase optimization. Eventually, they become efficient. I can spell sometimes. What does that mean to become efficient? It means they cancel each other out. There's no money in there. Have you ever talked to the high-speed, the HFT traders? Ask them, say, well, how much does your algorithm make? And they say nothing, pennies. Occasionally we make $1, maybe $100, and you're like, that doesn't sound like enough. And it's not. The only reason they keep doing it is because if they don't optimize out the opponent will get more optimal than they are and win. So they have to constantly optimize each other out. So where's the inefficiency that causes prices to move? It's not in the algorithm. It's you. You're the inefficient part of the market. If people didn't play, this is what markets would look like. Because the institutions just say, well, the price should be this. And it would just go there instantly as soon as all the institutions had the information. And the only person who has an edge is if you could process your computer faster than everyone else and maybe get in here before it moved. But why would you do that? It would just go. So all the inefficiency in the middle is you. You're the thing that makes this ugly. So you can't outpace humans because humans have a level of inefficiency that can't be optimized for. We suck at getting perfect. You don't have perfect memory. You don't have perfect reflexes. You don't make perfect decisions. All those inefficiencies are the natural speed limit of the market. So does tracking human behavior, is that useful in trading? Absolutely. It is so useful because that's the only thing that you have. Everything else is optimized out. There might be some squabbles between institutions that cause different things, but I think more than anything, it's a bunch of large institutions at a table consuming the retail market and talking about it. Well, you take that, I'll take this. Okay. Well, I'm going to lose a bunch of money. Well, you're not going to take a loss. I know I'm going to make a bunch of money, but I'm not going to make a bunch of money and a bunch of money. And that's, okay, you win now, I'll win now. They don't lose money. I mean, yeah, we see them get liquidated, but I don't think they lose money the way that you think they lose money and the way I think of it. So that's important. It's important to recognize you can't outpace human emotion in trading. You cannot. So the big speed limit essentially is how fast you can metabolize fear. When you're afraid, how long does it take you to metabolize that and come back to your senses and make rational choices until you're afraid, and everything in between. So looking at that and thinking about it that way, and you say, does this kind of behavior make sense? To say, well, is that even reasonable? Heavens, yes, it's reasonable. You have to play these games. It's part of the game. It's just part of the game. So I think that's what's going on here. I think that we're having a situation where that we're trying to, I think the market's trying to optimize, but it can't forget the speed limit, that human beings are a part of this. We have to let the bears have the gun. They have to put genuine fear in the bulls, or there was no risk. Like, the bears aren't going to do it. And I think they've done that. I don't know about you, but I think they did that. So keep your eye on this. I think right here was the liquidation. It got right through the spot we were looking at, right? Got right through there. We had a move down. It didn't curl down at that time, so I'm a little skeptical again. But nonetheless, I think it's really important that you keep in mind that these bulls waited till the very last minute, till the cup was basically empty, before they said, sure, you guys can have a drink. And the bears are like, and we get a big old aggressive move, and I don't know if it's going to move as far as some people really hope. I think that a lot of traders did this. Are you ready? If this was you, just know your behavior is predictable. And if I can see it, so can the market gods. I think people went like this. Let me move my face. I think people went, let's get a square. They said to themselves, my goodness, that is one healthy gap. And you know what? Past that gap, we could easily run to fill that expansion bar right there. That one. Sorry, this is misleading looking. Right there. I think that bears saw this dip down through the overnight lows, and especially yesterday's lows, and they started drawing these mental lines that looked like this. I think that's what bears are doing. I think that's what you're thinking. If you were part of this group, just know that you're extremely predictable. I can see you. Not you, but your group. I know what you did. I see that stuff. In fact, I've done it before, so much that I eventually said to myself, this is stupid and it doesn't work. But there's a bunch of people who don't know it's stupid, and we could run them out of the market. You know, it makes more sense to trade against people making obvious choices than it does to try and trade obvious choices. I mean, it is a business, right? Like, the whole goal here is to separate people from their money. That's just me. And under the context that we're seeing right now, and the events that we just saw, and the way that tension happened and all lined up and the way it looked, it's sort of like, I don't think this is legitimate. The bears were front running. The bulls finally conceded at the very end. It's almost like the bulls called the bears this morning and said, hey, gonna make a deal? Yeah, well, you guys hop in. We won't crush you. And right at the end of the day, we'll nod and let all the rest of the bears know you can take profit while they sell into the market, right? They said, you guys sell and we won't get in your way, even though we could crush you. They could totally, right? And then we'll nod, and then you take profit when everybody else is getting in. We'll not trade here, and we'll consume that liquidity here. You starting to see what I'm seeing here? Why did you wait till the end of the day? It's almost like you colluded a little bit. You see what I don't know. In my opinion, that's possible, but it's I can't prove. I can't say that the bears were front running this previously established agreement, verbal or just implied. But tomorrow you might say that that's what happened. I think tomorrow that's what it was a trap. Well, yeah, but did you see it while it was happening? Or did you wait until it had happened, screwed you over, decided you didn't want to be wrong, and started blaming the trap? Because those are very different. So, I mean, you see what I'm seeing here? I hope so. I hope you guys see that. Yeah, emotions and liquidity. Yeah, I was reading Mike said here. Give them some confidence. So Mike's catching on, or maybe Mike already knew this stuff. I think the good traders all essentially come to the same conclusions. I don't think there's multiple endpoints. Well, there might be two. One of them is, can I make a machine that can trade this market? And that is one endpoint you can come to, and it is possible. It's just expensive, and you don't get a high level of accuracy. You can also come to the other endpoint, which is, can I trade? It's not even trading. It's, can I understand what's going on? And those are the two. I don't think there's multiple other endpoints you come to. Anyway, so that's what I'm seeing. And it's starting even now to look like that's playing out. We got down to that liquidity down there. Do you see it? Are you seeing this? Okay, so moving back up, I would like to see tension near zero, because I think tomorrow having a zero test is effective. I do think the bulls are going to show up. So yeah, if you took advantage of the short side and you were able to get in and get out and make money, good. I think that means, I'm just going to guess that if you did do that, it means that you were able to pick up on the actual effort that the bears had. But if you were shorting all day yesterday and the day before and the day before, bad, because that means you're just shorting everything, and winning today does not mean you're good at that. You had to recognize something in the change of character, which I did not pick up on until this afternoon, when things start to look fishy. So if you did, great. The thing that I think you're picking up on was that extra force that the bears were trying to exert, but it's starting to look like collusion to me. So going into tomorrow, what do we need? How does elasticity end? What does that look like? I'll tell you what it looks like. Typically you get, so we have our, we'll call this event 0, which is where you get the nod. And in our event 0, it's right here, or sorry, yeah, right here, where that it popped down and it was clear, oh, you guys are giving the nod. After event 0, you get the burn. And that is where tension moves as close to 0 as it can get. And occasionally, not always, but often, you get the controlling party fail. So they just sort of step out of the way. And the reason is because there's still room. And they're like, well, would we rather trade here or wait for a better price, or that you get a 0 test? Would we rather just step aside again and let tension get to 0? That happens a lot. So right at the 0 test, you get that 0 test, you see trapped orders show up, something like this, and you see price move almost exactly like it's doing now. And then you look at tension and you say to yourself, as it moves through there, what's happening? Is tension doing this? Is tension doing this? This is acceleration. Did it bounce? Is it just sort of continuing along the same path? And I can show you that we've seen this before. It sort of, right here, it tried to bounce. There was effort, and the bears tried to defend to the short side. Right here, as it got to 0, you see it stopped, and price popped back up. These are not cherry-picked. These are just the last two. This is typical when you have situations where the bulls are interested in being active. And price popped. And tension continued down, but the bulls did not let it go. And this whole section was just trapping in people. Same here. I think this initial push down had to do with bears defending. And then this whole thing just had to do with letting people come in on the wrong side. And so here we're going to get that. I think I anticipate it to be a little cleaner than the previous two, because now we have a precedent where the previous two were a little different narratives when we had them. This one's like, bulls are winning, they've slaughtered the bears, gets there. I anticipate the bulls to say, let's do this. And then we may not even get there. That's what I'm anticipating based on their past behavior. Okay, so I think the levels that are going to matter going forward from here, if we move back up, the spots that are going to matter are going to be this one here, which is a lot of people are going to draw lines there, and this one here. Because this is where the positions are for the bears. So if the bears realize that they're screwed, their liquidation's going to be that nice little spot we saw before. And you'll say to yourself, at the end of it all, hey, they finally did it. It just took a long time, which is a story that you'll find yourself saying over and over. Say, oh, that took a long time. So if tomorrow we see bulls come in and pick this up, we see, this pops up, we have a bullish test or something like that, and tension is, tension could even be right here at 0, and then we see them hit, it's over. It's over. That's it. The bears are defending daily tension. So look for that tomorrow. This is going to be a big event. Maybe velocity opens higher and it comes down as samples or something, and you see them defend tension. What the bears should be seeing that as they go, ah, crap, we ran the elasticity as far as we could go. The bulls are not giving it up. Run. And the objective would be then for the bulls to push price right back up to liquidate these two positions as best they can, which is a little tough for the next day, but they're good places to eyeball. But I think the objective would be to get right up here to that one liquidity position that we were looking at earlier today and never quite got to. I think that's where it's headed if the bulls pick it up. If the bulls do nothing, tension pops down, say decay rises in the morning and samples the bears, or maybe velocity opens here and samples the bears, something like that, and the bears hit and tension pumps, then the bears in that moment, okay, you ready? This is the seconds. The bears in that moment's eyes will shift from 30 to daily. In that moment, when you see that move, they'll go, daily tension, we want it to 0. And that's important because it will help you understand as quickly as possible what's happening during the first 30 minutes of the market tomorrow morning. And it'll help you understand just how far the market's looking to go. Bulls will want to push this up through that liquidity position. Bears will want to get daily tension down to 0. That's the scope of both directions in the morning. Now you know. It's going to be these samples in the morning, I think, are going to have more impact than normal samples because they have weight on the longer term trend. So tomorrow's first hour or two is going to be more significant than usual. It's a place where you probably could stick a big fat line and expect support and resistance to come in as well, because it's going to help us interpret, are we going to get another leg up by the bulls, or are the bears going to try and topple this down, and we're going to look at long-term ranging behaviors most likely. It's going to be determined tomorrow pretty quick. If you have tools that you think you know what's going to happen, okay, great. Hopefully we see these things all line up, but I think it's really important to wait to see it before you see it. You wait to say, I actually see these things happening before you try and throw money at it. Say, oh, I'm selling because I think the bears are doing it, or I'm buying because I think the bulls are doing it. I think the best strategy at this point is, again, if you're in a swing trade from a long time ago, this is a place where you could hold. I don't think it's a good spot to try and initiate a new position into the close today or something like that. It's not a good place to be trying to pick up a swing because the potentials are so wide. So I think probably the thing that we could maybe make a statement about tomorrow, it's going somewhere. It will not stick around for long. I think either direction it's going to move, and I think you know what that means in terms of options. So that's what I see coming up in the morning. So into the close today, I still think the best thing to do is get this tension number down to as close to 0 as we can, because that's going to give us the most conflict at the open, the most interesting market, the most people just doing stuff and getting their faces ripped off, like, you know how it goes. So was that clear? If you guys have questions, shoot me questions. There's a couple minutes left. I don't think there's going to be a whole lot of other activities and things going on into the close. I think this market's staring down tomorrow morning. I think bears should be very nervous about getting hurt tomorrow in the first couple hours. And I think the bulls should be hyper-focused on making sure probabilities don't flip under 0. So I think that's where the traders are sitting at. The conflict's not going to really get to people punching each other in the face until we see it. Maybe things move the last 15 minutes and we could get a bear sample here. If we get a bear sample and it just pushes up through it, it's over. We're not going to have great opportunities. That's what it would look like to me if the bears got sampled in the next 5 minutes and then it just ran through their position. I'd say, well, Christmas came early. Hard to trade that kind of stuff. The only way you could pick up on and trade that right now is to say, I think that the bulls are going to win because of the precedence and the narrative. That's where I'm leaning. So if that's what you think, that's possible, but I'm not going to be trading it till tomorrow. I'm going to wait to see it before I let myself see it and act on it. So that's where we're at. I hope this helps. If you guys have comments, stuff you want to share, I always read everything you guys say and I take it into consideration. I think it's important to do and valuable. So yeah, I'll see you guys tomorrow. Oh, I had that off.